Good morning. Good Friday, guys. It's me. I'm Grady on the charts. And let's go ahead and get involved with the market today. It's going to be quite a day. But so I think that the main focus. Morning. Perfect Friday, guys. It's me. I'm Grady on the charts. That's perfect. That's exactly what I needed. All right. So I think that the main thing that we need to do is we need to go into the weekend strong, right? So we don't want to go into the weekend regretting over trading. We don't want to go into the weekend regretting um, um, impatience or regretting uncertainty. We want to go into the weekend strong, right? So we're going to want to enjoy our weekend. So we want to limit um, our reactivity. We want to plan ahead, be very strategic, be very timely, get in, get up, get out, and then start our weekend. I hope you guys had a great week. I hope you were able to get your P&L in the right orientation. And let's go ahead and just take a quick look at the news. We have a few minutes here before the market opens. Let's see. Today is Friday, April 25th. We have Great Britain retail sales month of the month. Okay, there's news coming out of a few other countries. We have JOLTS today at 10 a.m. No, that's not true. That's not true. Today is Friday. Next Tuesday, we have JOLTS at 10 a.m. And then we have news next Wednesday, April the 30th. But nothing that's really setting off alarms here on our charts today. So that's a good thing. So barring any um, unscheduled news, then we should have a fairly stable day, fairly stable volatility, decent ranges, and so we just need to jump in here and see what we can do. All right, let's take a look at the charts here. Take a look at what we have. I'm going to hop over here to the higher time frame. I was marking out some levels last night while charting, and it seemed that last night we hit a gap above some relative equal highs that were established last week or week before. And it was a sort of a daily imbalance that we ran into. Excuse me. So let's go to the higher time frame chart. This is a 4-hour chart. There's an imbalance above these highs here. We ran into that level last night. This red line represents the opening price for today's current candle. We have a swing high at that level, and then we kind of rolled over, and then we ran into these relative equal levels here. Something is going on with, okay, something is going on with TradingView. I'm not quite sure why it would be doing that, but the price is sort of flickering back and forth, and it probably means that what I need to do is magnet. No, because the magnet should snap it. I'll probably need to turn this, yeah, I'll probably need to start over here real quick and see what's going on here. So what I'm going to do is I'm going to just pop over to disclosure. Excuse me. I'm gonna turn off TradingView. We'll restart the application. And now we'll see whether or not we still have those. We'll see if we still have these technical issues. Okay, whatever was going on, it seems to have stabilized. All right, cool. Okay. So from the opening price this morning, we ran up just a little bit into that imbalance, and then we turned over and dropped down. We have 8 seconds now before the opening bell. And of course, what we're going to do is we're going to look for that first presented fair value gap. Whoa, there's the market open. Excuse me. We're going to look for that first. My voice has been really doing something weird lately. 1 minute, 1 month. Hmm. Perhaps this is where we closed last night. That's 50% retracement of the range between where we closed and where we opened. So we close here, open here. We ran up 50% of that range. It would be irresponsible for me to go ahead. Actually, I'm sitting here on minis right now. Yet I think it would be irresponsible for me to just jump in right there at this particular area. However, because I'm not quite prepared to take that trade, although it looks very, very good. It looks like a very, very good trade. Excuse me. Okay, I think I'm gonna cut the short the stream short today. Mm. Normally we run here for about 2 hours, but with my voice being as it is right now, I really I'm probably going to um let's see, should I put on some risk here today? 3 minutes before the close of this first 5 minute candle. That was an immediate retrace to the 50% range of the gap between the close and the open of today's price. Mm. Could it be that easy is the question, right? Could it be that easy? And I really think that we could possibly see that for today's price action. But I can't get short. Even if I wanted to get short here, I couldn't get short here because just of the relationship between the low of this candle, that's a 5 minute candle low. Here's the high of this current 5 minute candle. And it appears that we're going to get away from it very quickly here off the open. And for those of us who aren't prepared, we may or may not get an opportunity to get involved in this particular trade. We had some pre-market consolidation through London. Outside of London, we dropped down, then we consolidated. After we dropped down to these low, to this wick, we moved to the upside, came in. We held this level, popped up, took out this high, and then immediately turned over and dropped down. I'm watching this gap. I'm not really anticipating that we would run through it, but we're still watching it to see how it would behave. Red line represents the low of this up close 5 minute candle. Watching to see whether or not these levels are respected here, or whether or not we're going to push high into this candle. There's a small imbalance between the low of this wick and the body of this candle. We just traded into it. We traded past it. This is the closing price of that up close candle. And yeah, we're still watching it just to see how it performs. 1 minute left in the 5 minute candle. Daily candle's been bearish up until this point. I'm watching to see whether or not that trend continues. We've traded up to the wick of this up close candle. It's the highest up close candle since this move down. It's up above those prior candles. This candle in the 1 minute is about to close 33 seconds. There's 30 seconds left in the 5 minute candle. I am very cautious about the way the price is trading immediately off the open. I'm looking for any imbalances that we could have dropped down into that would have sent us higher. On the 5 minute, we do have this gap right here. Pull that forward. I'll just mark it up like this. A little bit of a disruption to my week. So my trading rhythm seems just to be off. If you can understand how, being in the market every day consistently and not missing a day keeps you in the rhythm of current price action. We're in a gap on the 15-minute chart. Now this is the gap that represented the difference between the close and the open. And we've gone into the premium of that level. We can remove this, or rather adjust it to the current gap in the 15-minute chart that I'm watching here. This is what it looks like. I did it off screen, so it's a little odd. I'm just gonna mark that off. We're in the premium. 9 minutes left on the 15-minute chart. We just tapped the premium. We just started a new 5-minute candle. Regardless of what happens here, I am probably, we just tapped the wick of this up close candle and rejected it. Small imbalance here on the 5-second chart between these two. I dropped down to the 15-second chart. Did not clearly identify the first presented fair value gap. There's an imbalance here, and there's one here. There's also one here in the same area where these lines are. It's not what I wanted to do. This is what I wanted to do. I'm looking at the wick of this up close candle, imagining that that's a rejection of that level. I'm gonna sell here and buy there for a rejection of this wick. We ran through it immediately. That's good. Just to look like a second too early. Try it again here. How quickly I took these two trades. I get that. The unfortunate part for me is that I'm trying to find my way. You can tell by the way that I'm speaking that I've been rattled by my off day here. So it is what it is. It is what it is. We had a very good day, and after I got off the stream the day before yesterday, so we were able to actually really climb out of a hole that we had found ourselves in, and we were doing very well to rebound in our account. And I think right now, what I wanted to do then is the same thing I wanted to do now is I wanted to preserve that sort of um positive momentum. Let's see where we are here. How bad this drawdown is. $491. So we made it above that $100,000 mark. That's the mark that we were looking to get above. Excuse me. And so we made it to that particular objective. And I'm saying to myself now, I don't have anything to prove, right? Can I go into drawdown and work my way out of drawdown? Sure you can, Grady. Sure you can. Do you have anything else to prove now, right? And I really don't. I really, really don't. What I need to do is I need to wait for this 5-minute candle to close because I think that the area that I'm looking at, I like it for an entry. All right. That's the deal. I really like this area for an entry. We're in the wick of a 15-minute candle, and we can go ahead and just chill here for a second. We'll see what happens with this. And I really, really like where we are. I like where I am. Everything is going cool. We're below that 50% mark now. Coming into the end of the 5-minute candle. And it just drops down just a little bit. This next candle could blow us out the water on this 15-minute chart and then begin to run higher. Or we could turn over again. It goes up and it hits our stop loss. Does it move higher? Yeah. So wow, just right off the rip. This is whew, I'm gonna turn to the camera. This is exactly the thought process of having that day off. This is exactly how I felt like I was going to come back in. This is exactly what I thought I was going to experience, exactly what I thought I was going to feel. Being eager and ready to get involved in the market, but it's at the same time having this sort of um disconnection, right? Sort of a strange feeling of disconnection from, and I was just like, okay, I don't want to have the day off. I don't want to take the day off. I want to be on the trade. I want to be in the trade. I want to be in the market. And lo and behold, I come right back and here we are again, right? So it is what it is. All right. 290, 250. Okay. What I'm going to do here is I'm just going to move my stop loss down a little bit. I don't really want to see us come back up this way, but I'm gonna reduce the risk on this trade, and I want to hold this trade for a minute here. Catch my breath, right? Catch my breath, right? Let the drawdown kind of peel away. This is the trade that I thought that I wanted to find here. But I also on the 5 minute chart wanted to see us go down below this gap and continue. I can mitigate the drawdown right now, but it took me so many trades to get involved in it that now I'm saying to myself, okay, well, I just pulled back just a little bit. How do I position myself now if I found my way into the trade properly? How do I position myself just to sit and let it trade, right? Okay. Well, two things are playing in my mind right now. First thing is dude, just take the trade off, take the risk off. You got your way in. Go ahead and accept what the market is giving you and go on with the rest of your day. Okay. So now we've dropped down and I'm in profit just a little bit. And I'm attempting to just sit on this trade and let it play out up 300. Okay. So I'm gonna move my stop loss down just a little bit, which makes no sense, right? So obviously I could have just gone ahead and taken the profit and then reset for the next entry. A minute and 21 left in the 5 minute candle. Oh, crazy week. Crazy week. Crazy week. I like what I see on the 15-second chart. We've gone down below that up close candle. 1 minute left in the 15-minute candle. All right. So now I have a serious decision to make. Go back into drawdown, right? Go back into drawdown and let all of that come back against me, or stay in it for the profit, or stay in it for the profit. And I'm going to attempt to stay in it for the profit today. We were able to go down $2,000, and in several days we came back. Today we went down a couple of $100, and then we've been able to kind of sustain ourselves just a little bit. But at this point, there's not much else that we could probably do. I could take the $277, shut the computer off, right? And I think what I'm going to do is I'm going to lock this in today. That's what I'm going to do. That's what I'm going to do. I locked the profit in early in the day, went up $90. So let's start over fresh. Start over fresh. We came in a little bit heated, came in excited, and did some damage, right? We came in heated, came in excited, and we did some damage. This retracement back to the underside of this imbalance. Hmm. All right. My expectation really is because we closed below consequent encroachment on this 5 minute, on the 15-minute gap, but on the 5 minute, we closed below consequent encroachment. We turned over and we've come all the way back, excuse me, to the low of this 5 minute candle here. And we just touched the low of that 5 minute candle. There on the 1 minute, there's an imbalance. We turned over right at that imbalance on the 1 minute. Imbalance here, imbalance there. We traded right there, and then we turned over. On the lower time frame, we dropped down below the gap. Again, we dropped out of it, pumped up a little. The time is 9:46 a.m. Time is 9:46 a.m. So the price could just begin to slide here, and that retracement to that imbalance was going to be our secondary entry. That would have given us a very protective stop, and then we've gone into decent profit today. Oh boy. Problem number one was taking several real fast trades off the open. And did not like those. Did not like them at all. But today seems very lubricated. So far, it seems very lubricated. Even before 10 a.m., we've run to a lot of significant levels very quickly. Honestly, I'm looking at the 5 minute chart, and the 5 minute chart seems to be trading like the 1 minute chart. So I'm struggling to kind of figure out what that could represent for us truly. Mm, okay, let's see. I might have to give some money back here in order to get involved in the trade again. This is just below where we exited, so that's fine. We were not going to be stopped out here, so that's fine. However, where are we going so rapidly that we can't seem to wait for me to get involved? Where are we going so quickly? Hmm. It's Friday. It's Friday. Okay. The down close candle here on the 1 minute did not close below this level. We dropped down here to like the mean threshold of this down close candle, and we immediately popped up to the low of that candle. This candle rose. Just want to see if we get any movement to the downside from here. Or are we gonna or are we going to come up here and take some money from it? Okay. Lower this candle. Today is sloppy. It's sloppy. Sloppy Joe. Sloppy Joe Friday. The movement off the open was pretty. Organized, well directed. We moved to this gap. We closed at the range of the movement from yesterday to today. Right? There was a gap here. We filled that gap, traded into this upper range, dropped down, moved higher, moved lower. Right? So we closed that gap, dropped in, moved higher, moved lower. Now on the 1 minute chart, we're at the low of this range. The high of the 1 minute candle is here. We just kind of touched that just a little bit. Mm, mm. All right, let's slow down. It's fine. Everything is fine, actually. Everything is fine. I think I'm down $10, something like that. Everything is fine. But I'm glad to get back. I'm glad to at least get on the chart today instead of having that long weekend and trying to come back Monday. That truly would have been nerve-wracking. There would not have been much that I could have done to mitigate that feeling of rustiness. Oh, shoot, that's not what I wanted. Oh, come back. Okay. All right. Are you listening? Listening, Grady? Yeah, I am. Yes, I am. It's okay though. Sometimes, while you're swimming in muddy water, then it helps you really understand your capability, right? Swimming in muddy water. The reason you can't see is because you have mud in your eyes. Doesn't that make sense? The reason you can't see is because you have mud in your eyes. Get out the mud, take a step back, and open your eyes. Look, what do you see? We see a hourly candle that ran up into that gap on the 15-minute, and we dropped way, 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 way down. And we are sitting right on the opening price of the prior down close candle in the 1 hour chart. In the 5 minute, we've dropped in very low, very deep to this gap. Okay, now we see that. Now, in order to get into this trade, I'm going to have to take on a little more risk than I want to, because once we dropped in and we traded up to consequent encroachment, I feel like I was not able to trust any of this. And so my rhythm and timing could very well just be off. And I would just have to, I entered extremely late. How do I know I'm late? Because I'm entering on a down close of the candle. See, the candle is down and then I entered. Where I wanted to enter was when we tapped this consequent encroachment of this gap. That's where I wanted to tap to get in. Where I'm exposed is we still have the wick and the body of this up close candle that we could possibly trade to. If we stay in the discount of this and move down, that would be that would be ideal. That all of the back and forth price action that we saw here was enough to um, weigh down price for a bit. Excuse me. Okay. I'm looking for price to move away from this area significantly because we're in this imbalance right here. But we dropped down in, we turned over a little bit. This candle closed above that one. Then we try to drop back in. I'm just watching for us to move down below. We don't close below it yet. That's on the 1 minute. On the 15-second chart. Just looking for similar stuff to happen on the lower time frames. We're not really out of the woods yet on this entry, so I haven't moved my stop loss. I'm just watching these up close candles on the sub 1 minute time frames to see what type of price responses we get. Remember, this 1 minute candle right here, we never touched it yet. We haven't touched the low end of the wick. I am in significant jeopardy of being stopped out because I'm so low in the wick. We could trade all the way to the body, up inside the body of that candle, and my stop loss is right there. But I did not move my stop loss because I'm looking at the consequent encroachment this um of this gap to see whether or not that's going to be enough to um, keep price down. It may or may not be. So I'm not saying yay or nay. It's 2 seconds left in the 5 minute candle. That's an issue. So we pop open on the 5 minute, and we could be in a place for a rally to the upside before any type of a move down. It's a lot of heat on this trade. A lot of heat on this trade. And if I guess not going to go much further than that to the upside. Now let's see what I did with my trade today. Put myself right back in the position that I was before I got out of this position, which means that I don't know what that means. So hit the low of that up close. And I took the short there and I took the buy here. On the lower, we still see that there's an imbalance here. Do not want to go, I don't want to go above that level. Hmm. Yeah, I think I'm premature on all the concepts and thoughts that I have. I think I'm just severely premature on it. Yeah, I think I'm severely like we might be in a higher time frame consolidation. And we made a huge move down in the pre-market and from Asia through London. We had a huge move down. And so we opened in London. And because of my distraction, I'm not considering that this is going to be a higher time frame resolution, which means that price could just move back and forth through an extensive range before it decides to go anywhere that we would think that it would go. So I need to take that into consideration right now. I need to take that into consideration. Um, this strangely enough it seems I at first I would be happy. I would kind of be excited about this, but the reason to not be excited is that we're just dropping down into the wick of this 1 minute candle. Right? We just touched the wick of that 1 minute candle. And that makes me feel because if we at the end of this 5 minute candle, right, in the last 2 minutes of this 5 minute candle, began to move down through these ranges to get down well down into this wick, right? Just to pop up, trade to this intersection, close, and then move lower. That's one thing. But to come to this section to get act consequent encroachment and then close bodies on this range here on the 1 minute chart, it's not really what I'm looking for. In 30 seconds, I'm going to really see 30 seconds, we're going to see exactly where we are. 30 seconds, we're going to see exactly where we are. And we have a chance to move lower, but it's just harder to see. It's harder to see us. It's hard to see that we could even move lower at this point. Last minute of the 5 minute candle, we're moving in the opposite direction. That would be fine to make a new high on the 5. Nice little push up. But then in the last minute, turn over and then just really get down. Turn over and get down. Now watch this down close candle. Reducing my risk here. We came up here and we did this part. Reducing my risk, literally on my pennies. But 30 seconds left in the 5. 30 seconds left in the 5. You see this high, this up close 1 minute candle? That's an issue. 17 seconds, 10 or 12 seconds. 12 seconds. And before that, we drop down in 10, 8, 7, 6, 5, 4, 3. What just happened? What just happened? Did I just tap that? Did I just get out of the trade? What? What just, okay, 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 okay. Let's see what happened. Okay, I see what happened. Look at this. Right as we're coming into the end of the 5 minute candle. Okay. Here's where we were. In a split second, right? In a sub-second interval, price drops down below, drops into profit for me. And then because I'm counting down, right? Five, four, three, two. And then in a sub-second interval, price gaps. Mm, that's crazy. In a sub-second interval, price gaps. Stops me out before I could even react. If I had no stop loss on it, then this is where it would be, right? If I had no stop loss, this is where it would be before I could understand where the next see because from here, let's see, from here, this is where we were. We moved down below my entry. We opened, went down again, and but before this my system could recognize where we were up here because I remember I was being here and I said, "Oh yeah, look at this high right here. This is interesting." And we dropped down, took it out, and then we pop right back up to this level. Crazy, crazy. Whoa, that's crazy. Time is 10:02. You know, I really want to delete this stream from the internet, but I don't think I will. And I want to use psychological as a real psychological study of how from day to day, we endure especially early on. Well, and I say no, I don't say that early on because I want to say that with all with what I'm here for more experienced traders. We endure um, sort of a mental uh, game that a lot of other jobs don't have. They don't have this element of the mental game. Unless you're in a sport where people really like just trash talk or something like that. Um, yeah, most don't have a job that has this mental element to it, where at any given time, at any moment, you could sharp, right, at the top of your game, maybe chess or something like that. You could be sharp, maybe at the top of your game, and before you know it, um, something could happen. Somebody could say something, somebody could do something, some element of your life changes, and you are shaken or taken out of that element that you say to yourself, "Whoa, I'm really, I'm in, I'm on the top of my game, and right now, you know, I'm doing really great." And then you turn right around just moments later, and that's no longer the case. It's just, you know, it's so weird. It's so weird. I think I'm coming back up here. That's possible. So I'm put my Mm. Oh, looks like I'm scalping today. A move that I wanted to be a part of. I don't think I'm going to be able to be a part of. Today has been a bearish day so far, but every attempt that I have to get involved with the bearish move, we saw this the other day. It's just it comes back against me over and over again. 17 seconds left in the five. We drop right back down to where we were 2 seconds ago after we ran up to this high. Boom. Turn over. 3, 2, 1. Close. Push up. Push up. Come on, keep on going. Push up. 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 More. 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 Interesting. Sorry. I said more. Here we go. And then I'm gonna put my buy stop here. So every attempt that I had to in this to be a part of this trade to the downside, it's not there. It just comes right back against me. And yeah, it's just one of those elements. So yeah, one of these days I'm gonna learn the most crucial rule of trading, which is take what's offered. Take what's offered. I want to stay in the trade for long extended periods of times, extended periods of time, but taking what's offered is just one of those things where you say, "Hey, look, this is what it is. It's not going to be more than that. It's not going to be less than this. Take that." And I struggled with that the other day, and I think I came into a trade where every time the profit was the same every time. I'm down $1,400. And it's terrible that this is happening live like this, but most people have no idea about having this particular conviction. So let's go back to the higher time frame. Hey guys, let's not blow it this weekend, right? Let's have a good weekend. I'm cool with it actually. I'm cool with it because off stream the other day I had a $1,700 trade um that put us in a decent position. Then I got called away and got put into a psychological blender by a lot of weird stuff that happened. Met a lot of weird people, came at me a lot of weird directions. And yeah, I don't know if that's ever happened to you guys. I don't know if that's ever happened to you. It's had a very bad vibe. And that bad vibe has kind of been sitting with me, and this is what it looks like on the chart. It looks like my goal today is to not let that discomfort alter my trading success that I've been having recently, right? To not be affected by that weirdness that I don't like, right? But when do you step back and just say, "Hey, look, that's it for me today. I'm good. I'm good. I'm gonna sit back and I'm going to just, enjoy the rest of my day." And let's give it a second here. I want to see something. I really want to see something because I am not satisfied with what just happened right now. Nope, not satisfied. My ego is not gonna let me not continue to trade here. Hmm. Where are we going? We trade into a gap. We drop down and pop up. We dropped into an imbalance. We made a relative equal low on the 4-hour chart. I don't see. Well, let's take a look at the daily chart, right? Take a look at this daily chart right here. On the daily chart, the low of this candle is in alignment with the high of this down close candle. We dropped right down and we tapped it and we just bounced all the way back up to this point. Let's take that into consideration, okay? On the 4-hour chart. On the 4-hour chart, prior down close candle is here in that level. The high of this candle is here. I'm going to take just this level from here to here, grab it, pull it forward, okay? So this is 50% of that up close wick. We dropped down, we tapped in, and we moved up on the 4-hour chart. On the 15-minute chart, we just drop down to this down close candle. We hit this candle and then we popped up past this area all the way to here. So this movement down was down to this down close candle. Okay. So now we'll go back to the hourly chart. We'll just take a quick look at the hourly chart because I'm having issues seeing the entire hourly chart on this screen. And to TradingView is flickering and flashing like crazy today. Flickering and flashing like crazy. Regular trading hours, go back to electronic. Okay, so on the hourly chart, we're running all the way back into the low of the London session with this candle. There's an imbalance between this candle and then that one. But I'm gonna take this on the hourly chart and I'm gonna move it to the low of that up close candle because that kind of extends that gap. Now we dropped all the way down here and bounced right back up into this level. Okay. So we've kind of failed here at this point. We go to a lower time frame, 15-minute chart. We just ran up into this bank of candles here. This is a high with a low with a higher high. And then there's this up close candle. We can pull that forward, right? If we did that and we anticipated that as a breaker, then how could we even trade that? How could we even get involved with that, right? If we even wanted to. Well, maybe it's a breaker, maybe it's not, right? Now, the reason that we're saying maybe it's a breaker, maybe it's not now, is because all of the trading success that we've had prior to our little break um, gave us this sense of confidence that we had this sort of a consistency going, right? And that's okay. We do have consistency going, right? Because what we didn't have when we first started out is we didn't have any mechanism to pull back and to look at price action in a realistic way, right? To say, okay, what am I actually looking at? We hit the macro here, we drop down 9:50, 10 a.m. We are here, okay? Right now it's 10:12 a.m. and we've run that imbalance that we saw on the hourly time frame. Now we're back into this level here. We just tapped into this up close candle inside of this imbalance that's in the low of I guess we'll call it at the end of the Asian session. We are about a quarter way into London. Now, can we blow through London, right? That's the question. Are we going to blow through London? We hit the high of that imbalance. We're down below the quarter level. Now we're looking seriously at this chart to say, what do we think we can do right here with this price action? Right? We drop down to this down close candle. Boom, we take that down close candle, we pull it forward. There's a small imbalance on the 15-second chart from here to here. Boom, take that, pull that across. Bam. So that imbalance that we see right here in this down close candle, we drop down into the, I guess you say upper half of it. Now we're down into the lower half, into the wick of that candle, and then we've turned over and we bounced up just a little bit. Now we run it back. We're gonna see. I'm taking an ill-advised trade. It's ill-advised. It was just a quick little, and now I am going to give it a couple of seconds and we're going to see what happens at this imbalance. We're at the low of that up close candle and it's pushing strong or what? Because we closed way down here below the close of this prior candle, and then that's probably not enough. And I'm scared to do this, but I think I may very well hit max drawdown live on my live stream today. And yeah, that'll be the weekend. We're at the high of that gap. And I love pause right there. I love how it paused right there because it's not lost on me. That we, okay? It is not lost on me that we pause right there. So this was that gap. Now look at the spaces between all of this. with these spaces here, I need to include that space, and I need to drop all the way down to here. Pull this forward. That's over, not overlapping. There, boom. Pull this forward, boom. Okay, so now for some strange reason, we're going back and forth now. Low, lower low. I'm down $1,700. I can only risk $300 more. Dropped over to the micros real quick. To the micros real quick. Price turned over and moved up. Sold two micros. And what I want to do is I want to see that I am making certain particular judgment calls on the market. And I want to see that I am, as quickly as I'm making these misjudgments in the market, I want to see, oh, yes, I am making misjudgments in the market. And then I want to begin to see if I can go ahead and begin to correct. We're at the high of that imbalance. As you can see it here, we're at the high of that imbalance. And I don't think that we're going to see price go past that. I think we're going to see it drop down here and just kind of just chill. If this is a breaker, then that would be best for us today. If that's a breaker, this is best for us today. If it's not, then we're sitting here trying to scalp out uh 20, 30, $40 at a time in order to get ourselves corrected mentally. Mm, I love it. I love it. Okay. That's a very, 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 very bullish for me. Not necessarily. One thing I do know for sure is that today was a complete disaster. This is a complete disaster to me. Traded up above this close, dropped all the way back into this down close candle. Moved past the high of the down close candle into this small imbalance right here. A minute and 21 seconds left. This I can compare this to my other videos, and this is the stream I'm going to watch all weekend long. As I compare what I'm doing today to what I've done the other days. That's kind of how I think I'm going to look at this. Down, down, down. Now we're down here, right? 51 seconds left in the 5-minute candle. Taking this low out as we drop down here. And this low did not close below this one. So we did not close below that low of that candle, but we just popped up just a little bit. The middle, below the middle, traded up. You see, now my timing is off. Now I'm trading like a breakout, right? Now I'm trading like a breakout. Price drop, runs up, drops in. When we close below this level, I'm taking my entry, not taking my entry here. Yes, we did close below that level there. Then we turned over and we popped back up. Then I tried to get involved. If we make it down below this imbalance, then I believe that's going to show us a direction for the rest of the day. We traded to the high of the balance. We traded to 50% of the imbalance, which is here. If this or if this were a Judas swing, where price would just sprint to the upside and then turn over and dump, then we could we could mitigate the large amount of drawdown that we have today in that regard. But we would need to see this candle continue to the downside. We would need to see price continue lower. Mm. We're moving into the highs of those down closed candles on the 15-minute chart. Mm. Moving into the highs of the down closed candles on the 15-minute chart. We've been able to recover. No, we haven't recovered anything because we haven't exited. Now watch this gap because this gap was formed at 10 a.m. This gap was formed at 10 a.m. We're deep into the gap. There's 30 seconds left on this chart on the chart. We're watching it because again, it was formed at 10 a.m., meaning that it could be representative of the silver bullet for today because literally it is the 10 a.m. gap. Okay, we drop right back into it. And the only thing that we could do is hold on to these two contracts and see what happens if we can get down below the down close candle on the let me drop off to the hour. These down close candles on the hour, right? We have to move down below that down close candle and then this one. All we've done is just drop right back into the high of that. We've mitigated our drawdown by almost mitigated our drawdown by $300. And you're saying to yourself, well, why don't you just go ahead and get out here? It's possible that we could. On a 5 minute chart, there's also something I see that I've overlooked on the 5 minute. Sorry. Something I've overlooked on the 5 minute that's probably very serious, and that is this imbalance on the 5 minute chart. Move my stop loss down. If we come all the way across this entire gap, I don't want to see us come all that far back. This is only like what like 70, $80, but I don't want to see us come back that far. If I go to the 5 minute chart, then I'll show you this is what I'm looking at. That small imbalance right there. On the one, it's here. On the 5 second chart, where you at, buddy? Pull that forward on the 5 second chart. We had some sensitivity in that area. We did, we touched a few levels there. I don't want to see this candle close in the premium. Wicking to the premium is good, not closing the premium. I'd love to see this as a breakaway gap, especially on a day like today where I'm in a situation like I'm in today, that we would not go past this imbalance, that these two imbalances would work together to send price down. However, price could go up. However, price could go up, right? We're sitting inside the low of this imbalance. We're just touching that low. We're touching this low, touching this low. I'm sitting there saying to myself, well, get yourself as far away from max drawdown as possible, right? That was the first thing that I'm thinking. But the next thing that I think is this, and this happens when you trade prop firms, is the thing that you think, oh, max drawdown, max drawdown, which is wild because we actually trade for profit, right? We actually trade for profit. Now, I'm not saying ignore it. I'm not saying get reckless like you saw what I did here today. Today was just completely just wild. Um, we traded down, dropped down, gap down below. Is this a solid signal that the price is just gonna run right back up against me here, and I should take this? I have to think about it. 50 seconds. 50 seconds. 10:26 a.m. Come on, go ahead, show us the continuation to the downside. We started the day off bearish, and let's pull back at the end of a nice long week to the upside. A little bit of that TGIF would bail me out right now. A little bit of that TGIF would bail me out. I got myself in a little bit of trouble here. Got myself in a little bit of trouble, and now TGIF bail me out, baby. Looking at this gap here. This gap represents the level between the hours. So there's a gap up between prior hour and this hour. So I'm watching that level. Because I would like to see that level be traded across so that we can get down, get down, get down. Man, I don't often talk this much. So now when I'm on stream and I'm trying to explain myself and trading out loud, it's just this sort of thing where it's exhausting to a certain degree. All right, so we've been hanging out in this level at this level for a moment. And because we've been hanging out this level for a moment, it's given us time to do what? Time to think. Should we be thinking or should we be trading? Right? So thinking is sometimes when we look at the market and then we start counting and calculating all of our uncertainties and fears. And trading is when we are mitigating all of those uncertainties and fears with proper risk management and strategy. I'm looking at this 1 minute chart. It's just this. Yeah. Yes. Yep. Yep. Yeah. Okay. 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 That's a good start to what we wanted to see. This is a good start to what we want to see. Again, right? What did we do to ourselves here today? It's not over. It's not over. Why? Because even on the lower time frame, we're into these tiny little down close candles down here. So even when we do that, just prior that little move just prior to that is what? It is us setting the stage for the next range of trading. On the 5 minute candle, did we break below the 5 minute lows? Or did the low of this candle just drop down into the high of the lowest down close candle in the range? Right? So we're looking for this area down here before we could say, okay, right? Even then, taking out these lows is the proper place that we would look. So we would say to ourselves, oh, okay, price is reversing. Why? Because we took out certain levels. We traded to certain levels. We traded to certain lows. I pull this gap forward. We're at consequent encroachment of that gap. And then price got energetic back to the upside. Now, I want to see that? No, I don't. When I see a 15-minute chart like this, when I see a 15-minute chart like this, in my mind, I want to believe that in the next 20 seconds it's going to close down here. Will it? It doesn't have to. It does not have to. And that's the weird thing about the market is that we would think that this long up close candle is bullish. Or we could also think that this long down close candle is bearish. And then sometimes we can see those two candles side by side and they mean what they mean and they don't mean what they don't mean, right? They are as bullish as they can be and they are as bearish as they can be. And it just is what it is. Okay, so it looks like we see price coming back against me. Um, and I've accepted that. I've accepted that I see price coming back against me. And again, I'm not gonna jump out because I feel like that. I'm gonna stay in the trade and let the trade play out. Um, because I got a fairly decent entry. It started out fairly decently. The way that we had this consolidation from London, how we traded up into the discount of London, how we rejected the discount of London and then dropped back down into this range. That beginning narrative supports me doing nothing. It really supports me just sitting and watching how trade is going to progress from this point. So there's that, right? There's that. Uh, huh. Traded despicably this morning, but that's I'm not gonna say acceptable. That's understandable, and we should all as traders understand ourselves as we trade the market because we're really looking at our mirror. I'm on the 5 minute chart. I'm watching this level, that down close candle right there. I think I put, yeah, this down close candle. We just touched the opening price of the lowest down close candle in this range with this rundown. So that's what I'm watching for us to violate that. If I'm anticipating any type of movement lower, but we just dropped right down in, we touched it, and we pop right back up. On the lower time frames, however, we are gradually moving below certain levels. And it just seems as if it's sort of a high resistance scenario that we are just kind of grinding down through these zones. Um, if this is what the market is offering me, now I am considering the negotiation. I'm considering the negotiation now because it's just the way that we traded down below this, traded to the middle, traded down below, traded up above, traded the consequent encroachment, traded up above, traded down below, traded back to. Now we're kind of just two in it on the upside of this level. I don't like that at all. I do not like that at all. It's been back and forth, but seeing this 5 minute candle perform this way, no, it's not giving me what I want to see. I want to see price just go ahead and break these levels and get to the downside. And just give us that 30% retracement on the week. That would be cool. 30% retracement on the week would put us, oh, 40%. Can I put a 40% retracement on the week? Sorry about that. Oh, wait, that was 30% off the top. That's crazy. It was. Maybe I was thinking of something else. Maybe I was thinking of a trade to that gap we formed on Tuesday and Wednesday, right? Dropping down, filling in that gap. 46 seconds left in the 5 minute candle. Has a nice size imbalance here on the five. 30 seconds. This low is above this low. I don't like that either. When we hit this level up here, when we hit London low and we drop back in, I really, really wanted to see a level of market structure shift that was kind of support a continuation to the downside at this point. Even if we were bullish, I really wouldn't want to see price perform like this if we were bullish. You know, having these extended moves to the upside and then complete breakdowns, and then moves back to the upside and then complete breakdowns and then moves back to the upside. I wouldn't want to see price perform like that if I were bullish because that means that all the stop losses that I had down here were ran. And as you can see, as I'm short here, all my stop losses as I'm short are being ran, right? So this is the flat side though. If you know anything about, what ICT is about, says about these super straight lines, these jagged levels here, and then we have this straight level there. So I'm just gonna sit in this trade and wait and wait and wait and wait and wait. One of the well-known guru traders was talking about making 400,000 in a day, right? And he had to wait 5 hours or whatever, 10 hours for it to come, for it to finalize. And then he was just saying, with that amount of profit, wouldn't you, if somebody told you tomorrow, I'll give you $500,000 tomorrow, I don't think any of us would plan a trip. I don't think anybody would plan a trip to go out of town. If somebody called you on the phone and say, hey, look, I'm gonna give you 500,000 tomorrow. Nobody's gonna plan a trip to go out of town. We're gonna stay right where we are, and we're gonna do any and everything else that we could possibly do to, um, you know, figure out what we're gonna do in the meantime. But we're not going anywhere. We're gonna sit there and wait. 3 minutes, the 3 minute mark on the 5 minute candle. We had this up close. We ran that out right there. We just drop ran right above that just a little bit. And I told myself I was going to be done trading in an hour. And I had an opportunity to get out of this thing break even. I had an opportunity to get out of this thing up $300. But I did not. I did not. And you'll have these days too if you're getting started and you have a nice run of success. You could very well have these same days yourself, right? It could just be one of these things that we all have to go through at certain days, at certain points. The other day, it really ran in my favor, and I was in tune with the market, and I had set myself up for to get it done right, and then you know things happen, and the psychology got swayed, shook, faltered, and so now I'm back to um, I guess I'm back to my senses, I guess you would say. That volatility off the opening range is died down right now. Maybe this is showing us the direction we're going to go ahead and get into for the rest of the day. Again, this started at 10 a.m. We dropped down below it, came back up to it, moved down back below it, and then we're here, right? So if this is the gap at 10 a.m., should we be long at this point, right? Should we hit this, get out, flip long, and go for the ride? In my experience, that's been the case. In my experience, that has been the case because this gap right here is not going to offer us any sort of protection. Look where we are in the overall range on the 5 minute imbalance. We are well into the premium. So, yep, that $400 that was going to pull us back from the brink, that's off the table. 36 seconds left in this 5 minute candle. Oh boy. Nice push at the end of the 5 minute candle. Excuse me. Just waiting. Just waiting. Oh, there we go. Stop me out. Now I have to go back to the higher time frame and see where we are in relationship to overall price action. There's 20 minutes left in this hour. Okay, we took out the prior hourly high. We ran up to the lows of the higher time frame up close candles. As we can see here, we're back to the high of that imbalance, or we touched it right here. Quick, quick there. That's because we came right back into that 25% level. Just looking for just a little bit of a retracement back down below this gap, back down below that level right there. Price just drops down, turns right back over. Pull my stop loss right into break even. It's not highly profitable trading. It's not highly profitable trading, but I am just, looking at the end of this 5 minute candle. It's possible we'll drop back down to the high of the previous up close candle. We've kind of slid back into that area a little bit. I can't see. If we were to open on the new candle, new 5 minute, well, we're getting down back toward consequent encroachment of this gap. So let's watch. 2 minutes left in the five, but it seems like we're just dropping back down into whatever this is right here, right? And then we'll just turn over and move back to the upside. But I'm still holding, and there's no risk on this trade, so we're just still holding. My my true overall struggle today is not really profit. I don't think my struggle today is getting back to a quiet, balanced trading mentality. Quiet, balanced trading mentality. Just quiet and balanced, where you know I am back to my own personal equilibrium. That's where we're trying to get to right now. Get back to our own personal equilibrium with the market. Whatever the market is doing, just get back to a point where I am not charged up. I am equal with outcome, whatever the outcome is. That's what the outcome is. I am not looking for a particular level or number as far as financial. I am looking to see these two down close came in. We traded back up to the high of this up close candle and we touched it. 35 seconds left in that range. On the 5 minute, there are 31 seconds left in the 5 minute candle. Now I'm saying to myself, okay, this is the down close candle here. I pull that forward. This is the main threshold of this down close candle. Okay. You see how we're going to do this? We're painting by numbers now. Right? We're just going to paint by numbers. Now, I am overtrading. I am overtrading. I am overtrading. We've dropped back down into this down close candle. I am looking how we are in relationship to the mean threshold. New 5 minute candle just opened. Can't ignore that. Boom. There's the mean threshold. Pop up. We're up above it again. We're back to it again. We move up, up. Let's see if we drop down again. Come on, drop down a little bit. Drop down, drop down, drop down. Ooh. Come on, just drop down here a little bit. Oh, it didn't give it to me. How much time do we have left in the hour? 13 minutes. So new 15-minute candle kind of opened here. Take this, pull this up to here. These two up close candles there. Boom. Oh, look at that. Look at that. Look at that. Look at that. Is it breaking down, guys? No, this level represents the 5-minute high. Why would we be breaking down at this point? So there's a mean threshold of these two down close candles. We drop back down into, although I moved this level, mean threshold of this candle. Interesting, right? There's the mean threshold of that candle again. 1047 toward the beginning of the macro. Because what? Ooh, that's cool. 10 sorry. Whoa, whoa. 10 seconds left in the 1-minute candle. Mm-hmm. We just popped up above that level. Consolidation here. Yep. Oh boy. Excuse me. Sorry. Mm-mm. So weird. So weird. 1839. About to hit max drawdown again and put us right back to the situation we were in before. Oh. 3, 2, 1. And that is the close of that current 5-minute candle. So there we go. Pop in, tap that candle like this, drop down. So new 5-minute candle. And now we have some type of movement going on here. 31 seconds on this 1 minute candle. And so what are we looking for? So we drop down here into this small imbalance below these candles. Drop down here. Now 15-second chart. Pull that forward. To there. Boom. Excuse me. 8, 7, 6, 5, 4, 3, 2, 1. Drop right down to the body of that candle. Hmm? Whoa. We're inside the macro now. Beep, 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 boom. Hmm. Bang. Zip, doop, dee, doop, doo, dee, bang. We didn't take this high out. We dropped down lower, came up here, closed, and we did not take that high, but we turned over and dropped back down into the body of this 5 minute candle. 5 minutes left in the hour. Hmm. This box represents the range of this down close candle. I was looking for the mean threshold. We dropped in, popped right back up and touched the mean threshold, and then we moved down on this 5 minute candle here. Right off the open, really. Hmm. Mhm. 3 minutes and 48 seconds. 1 second here. Something weird has happened here. I was definitely wrong on that one. Mm. One of the hallmarks that I'm of today that I recognize is that I've just taken so many more trades than I normally take. And I wanted to reduce the number of trades that I was taking so that I could kind of control this drawdown thing. I came in hot, and what I wanted to do, mm, which is something that we're all working on if we're honest about. Excuse me. I'm not coughing enough. I'm just have to clear my throat 300 times. And what I wanted to do was this, right? Yep, this is what I wanted to do. And I'm not kind of, I really don't want to draw back from it. So we dropped down into this gap that we created at 10 a.m. again. And we touched it one more time. You see what I'm saying? At 10:57, at 11 a.m., we dropped into this gap one more time. We trade up to that up close candle. We did not go past it. We did that time. mm mm I mean, we created this gap at 10 a.m. We go down below it. We come all the way back above it. We consolidate it. We drop back down into it, and then we tap consequent encroachment of it. I might not be right. I might not be right, but I am as close to one of those particular types of days and trades where at 10 a.m. at 11 a.m. we drop right down into a gap that we created at 10 a.m. I might not be right about uh the direction, right? Because we just traded up into that gap and then we broke down. I am wrong. We didn't pop back up to this level. This should come back and stop me out. If this comes up and stops me out, no, no, stop me out. That's tripping. I'm going long. That was just the imbalance right here. Okay, everybody, witness, witness, watch and witness. This is exactly the issues. These are the issues that you don't think that you'll ever have to go through. But this is it. This is it. Hour starts in 17 seconds. What does this hour look like? It's a up close candle with a very long wick on it. And we're coming into these down close candles. And the only thing, oh, that's it. We're open. This is it. I can move it to break even. It could stop me out before we really get going. Or we're going to the downside and I'm not ready. Any of those things are fine. Any of those outcomes are fine. I don't really care. I don't really care. Any of those outcomes are fine. It probably could drop down here and run down below this down closed candle. And I'll just give it the breathing room into this wick right here and stop me out. That's fine. Or this new hourly candle could run to the upside. Or either any. It's 11 a.m., guys. And I know, and I've seen a lot of other traders, and they trade very. And I'm entering here. and I'm exiting there. And I really want to trade like that. I really want to be that person. But I think I have to trade with the personality that I have. That's not, because I don't think that's negotiable. I think that that's just the way that it is. Whoever you are, you have to trade, and then you have to reel all of that in, right? You have to reel it all in. Trade, you are whoever you are. Then you have to reel all of that stuff in. And this small little whatever this is that I marked out above here, I'm gonna remove it. I think it was like a 15-second up close, something or other. The way we trade it and then touch consequent encroachment and then drop back in, that's very powerful. Very, very powerful. And then we're consolidating right along my entry. Typical. It's typical. It's typical. It's typical. And there's the sorry, that's my Texas accent coming out. But there's the there's the interesting part about making an entry on a trade. How many times that you'll take an entry and price the market itself agrees, man, that was a great entry. Either to the upside or the downside, doesn't matter. But the market itself will agree that's a great entry. And the price will sit and undulate around your entry, up a dollar, down a dollar for a few minutes. That gets into your head. This is not the issue. These are not the things that are in my head, right? These aren't the issues that I'm dealing with today. The issues that I'm dealing with today are dealing with probably imposter syndrome. Probably just dealing with imposter syndrome. Those three down closed body candles are, I don't like those. This drop right here into that consequent encroachment suggests that I'm just going to bring my stop loss up to profitability, up to break even. I mean, just the way that we dropped in and we did that. We moved up above this down closed candle. Let's see if we get any continuation higher. It's 11 a.m. Do I think we're going to continue higher, or do I think that I'm being um getting the bear trap going? Right? Is this a bear trap for a nice move down to the downside all afternoon long? It seems like it could be. And the reason that I think that it could be is because when I have a day like I've had so far, it is the best day for me, it is the best trades that I don't get to take, right? The day does this weird stuff in the morning. I do weird stuff in the morning. I get myself completely upside down and over leveraged into a certain degree. And then on the 5 minute chart, I'm just looking for us to move up above this level right here and close on the 5 minute chart. Just a slight move back to the upside here on the 1 minute chart represents what? It just represents the idea that we're just moving back to this close of this up close candle. On the hourly chart, we're just rising inside of the prior hourly wick. On the 15-minute chart, this white line also represents the closing price of the up close 15-minute candle. Right? So we dropped down from the 15-minute candle at 10 a.m. 10:15 we closed lower. 10:30 we closed at this white line. At 11 a.m. we opened. At 11 a.m. we opened. Sorry, I'll probably get stopped out before I can get this out of my mouth. At 11 a.m. we opened here at this red line. Okay, so we opened here at 11 a.m. We went down here, came back up above. So there we have that. Now we're at the high of the prior up close uh, 15-minute candle, and we just kind of tap that level. Move my stop loss up just a lot more. There's nothing wrong with locking in $30, $40 at this point. All of that helps. All of it helps get us as far away from the draw of a max drawdown as possible. 3 minutes and 35 seconds left on the 5-minute candle. And I'm I'm paying close attention to this because I am curious about this overall outcome, how the market came to this level. We drop down in here. On the 5-minute chart, we could come right over here, look at this small imbalance level, and pull this forward, and we traded right into that and then broke down, but didn't continue down. We consolidated, made this high, consolidated, made that high, came up here, touched that, broke down, created this imbalance. Now we're trading very high into this range. So it's right, it's suspect to me. It's extremely suspect that I have the low of this and the high of this, and I could pull that forward, and that's a gap. That's very suspect to me as bullish price action. Overall, overall, I'm still looking at this range on the 15-minute chart between the lows of these candles and this candle. Pull that forward. We drop down below it, up to it, above it, down below it, into it, up to it. And now what? Hmm. I want to see us go through. I really want to see us go through. And I'm watching this price action for any signal that I should exit and reposition myself. Because overall, that's where I got my bearish sentiment from. Now, could it be a higher time frame? Um, Words are not coming to my brain, but I wanted to say words like higher time frame inversion of that down close range, right? It's 1108. We've finally taken these highs out above these relative equal highs. I'm going to exit this trade. I've exited, sold. I'm put my stop loss here. There's new 5-minute candle just open. No real continuation going on. Yep, no real continuation going on. Pull my stop loss down incredibly tight. Put on another contract. Bought another one. Pull my stop loss down incredibly tight. Probably just far tighter than I probably ever should. Mm, interesting. Let's see if we can move down below this level. Come on. No, we can't. That was this drop down. This drop down was exciting. I thought that was really what we were looking for, but it didn't. I thought it was really going to give us what we were looking for, but it didn't. 1900? Nope. Well below 1900. Hmm. Interesting. So, I mean, so that's what I'm looking at. And I'll go back through that again. I'm gonna go back to this again. What I was looking at. Try to really figure out what we dropped down. We created this imbalance here. There's a gap here. Bring it down to here. Pull that forward. Over here, I was looking at this to here, from here to here, and then pull that forward. And then that was supposed to be my breaker. On the lower time frame, we're retesting that level. We went to the consequent encroachment of that level. Then we moved up just a little bit higher. Mm. Again, let's go back to the higher time frame, and then we'll take a look at what we're looking at. So that was this larger gap. Boom. Above it to the bodies of these candles, back down in, back up to this level. So this candle closed literally on the high wick of that little bit above. We just were stopped out here. We created the consequent encroachment. Now we're halfway and through that range, but we're still here below the middle mean threshold of this up close candle, the lowest up close candle before this move up to there, because I'm looking at the high and the low and the higher high. And I was stopped out several times here at this range. It stopped out several times here at this range. Um, and and again, the strength, and I'm struggling to give this particular trade up. Eh, I'm not listening to my own advice. I'm not listening to my own advice. Just go ahead and call it a weekend and enjoy yourself grading. That's what that's it. I'm not listening to my own advice. I'm just gonna call it a weekend, and that's gonna be it. All right, guys. Thank you for stopping by. If you enjoyed all of the trading price action, remember there is a lot of risk when it comes to this trading. Go ahead and huh, remember that this is not financial advice. This is trading entertainment. I know you guys like seeing people make a lot of money, and yeah, me too. Have a good weekend, everybody. Bye bye.